In this video, traders, I'm going to talk about the caution of flipping from one market to the other. Stay tuned. Hey guys, warm welcome to you. All right, so in this video, I want to talk about flipping from one market to the other and why you've got to be so careful how you do it. So I'm going to roll back about a week ago. Crude oil, one of my favorite markets, was moving aggressively. Dow also starting to move aggressively, another one of my favorite markets. DAX was, but not interested in trading. That was more interested in trading the afternoon session. So crude oil had moved down lower and it was moving around. Well, I think it pushed up higher actually on news. It was pushed up higher. Lower was recently. It pushed up higher on news and it was like a very strong market, holding strong. There was opportunity there. So I'd gone into crude oil and I was trading crude oil. Not very good, I have to say. It wasn't the best. I wasn't that in tune with it. It was a bit scrappy, and I kind of thought, right, okay, well, the Dow's got opportunities. Go with the Dow. Now, the Dow and crude oil are two distinct different beasts. DAX is maybe a little bit more similar to crude oil with its choppiness, whereas the Dow YM futures, Dow spread bet, however you want to trade it, is a slightly different animal. Yes, it goes through phases of being very aggressive, very strong, lots of volatility, but generally speaking, it's a little bit smoother. The kind of spikes a little bit less. It's not one of the more liquid futures. It's liquid enough for what we need, guys, but it's not the S&P 500 liquidity. It's not Euro Stoxx liquidity. So it's one of those. It's an unusual one to trade. Many people don't trade it, but if you're in the UK, it's great to trade because if you're trading via a spread bet, you get the opportunity of the 1 point spread and you just mirror the YM futures and the Dow cash, etc. So by the by, I've done a video on that before. I'll probably do some more stuff about that in the future. So the point of this video, guys, is to say, listen, if you're trading, doesn't matter either whether you're trading crude oil Dow or Euro US dollar gold, Euro US dollar GBP JPY. The point is, if you're trading a couple of instruments, you've got to be so careful about how you switch modes. And for me, in that day, you know, it took me a while to kind of, I felt so out of tune with the Dow to come from the crude oil, kind of chopping around and it's sitting there and ripping off and doing a massive candle and pausing, as crude oil likes to do. And then the Dow very much, you know, much more calm, adhering to levels, maybe breaking through a little bit, much more rotational, a different market, a complete different beast. And it's almost two different skill sets. Well, it's not really different skill sets because it's still supply and demand, but it's still different because the nuances of how it works are different. So the key is when you're switching intraday or even intra-week, if you're a day trader, if you're a swing trader trading something like a slow utility over to a tech stock, then you end up you've got to recalibrate your trading barometer, if you like. You've got to sort of sit there and go, right, what are we doing? What's the kind of action at the moment? What's the sort of range we're expecting? What are the candles doing? What's the shape of the market? What are the levels? What's the flow? What's the engine? And recalibrate into that market, which is why it's challenging often to go back and forth into a market. Now, what is okay is if you've decided on your trade, you calibrated to, let's say, crude oil, and you've placed your trades and you're waiting for them to be filled and you've got your entries, you've got your exit, and you've done your due diligence and everything's prepared based on how you've calibrated that market. Then you go into another market, readjust, recalibrate, trade that. That's fine because you've done everything you need to do for the decision-making process while you're in tune with the market. Now, what I think is challenging, guys, and it can be, it cannot, but I think it swings and roundabouts, right? There's no black or white with this. It can be challenging to go from two distinct different types of market themes and market styles and how they trade intraday or intra-week if you're swing trading, because you're so then in tune with one, then you move to another. So you're kind of trading a really volatile stock one moment and you're trading a slow stock the next. You tend to even subconsciously start to trade around the way that is trading. And so then when you move it to a slower market, the way you trade that is most likely unprofitable. It's most likely got a negative expectancy. You can quite happily in a volatile market buy breakouts for a quick scalp or sell aggressive breakouts that spike, expect them to pull back. But in a quiet kind of chugging market or chugging equity or chugging index or whatever it may be, doing that might well be wrong because the breakouts aren't big enough, or if they do, they're actually genuine breakouts and you're fading them. And so it's understanding the difference between the two. So the point is, guys, is to have some caution if you're intraday trading specifically, and also swing trading, when you're moving from one instrument that's very different to the next. Now, they may behave similarly most of the time, but then one day you trade them, one's trading very small, but it happens narrowly, for example, but it happens to be at a level you're interested in, so you're involved in it. The other's trading under very volatile conditions. So you've got to be careful when that difference is very wide, and kind of the chasm between the volatility specifically is wide, because you can get caught out. So if you are doing that, it's having a recalibration moment. So when I move from crude oil to Dow's, like, right, I don't feel in tune with this. I need to watch it, observe it, get a feel for it. What are my candles doing? Where's my highs? Where's my lows? Right, what are my trade ideas? Where's my thesis? And spend a little bit more time so you don't get caught out diving in because you're seeing opportunity, which we often do as traders. We see volatility and we confuse that with opportunity, which it is, but it also can be a double-edged sword, right? So we appreciate the volatility, we appreciate the opportunities in the markets, but we respect the fact that they vary in the way they trade, and so we give them that little bit of respect, or a lot of respect, or a little bit of time, should I say, to kind of adjust and calibrate our trading style and strategy around that new market. So guys, if you are in the comment section below, if you trade kind of multiple markets, and let me know how you deal with the shift from one market to the other. Do you kind of just take it in your stride and they all trade very similarly? I know a lot of the Forex pairs at the moment do trade in a very similar manner, so it's easier. And generally speaking, some of the markets that I trade very similarly, but every so often one will start doing something the other one isn't. How do you kind of get around the fact that you're trading that? Do you then focus exclusively on one? That could be a workaround. You just focus on the one that you want to. Or if you want to focus on more, how do you get around moving from different dynamics and different market conditions? Let me know your thoughts in that comment section below, guys. And if you like this kind of stuff, give it a thumbs up and see you next one. Take care. Bye-bye.